Well, market bulls are back, but maybe sitting in a holding pen for a hot minute. Welcome to the Daily. My name's Jessica Amir, a market strategist here with me. It's great to have your company this 29th day of April. Well, would you believe there's just 4 more to go until the Australian federal election finally? And the polls and betting agencies are now both suggesting Labor probably will win the election, but who really knows? But I tell you what, who is winning, regardless of who wins the election on the weekend? Those who bought the dip into shares, they're winning regardless. The Aussie share market is now up about 9% from its low, while the NASDAQ 100 is up almost 16% from that April 7 low that we saw. And that's because the fear gauge has fallen from COVID levels. We hit 60 a couple of weeks ago, and now the market's fear gauge, which we track via the VIX, has fallen to a level of about 24. As mentioned yesterday, if the VIX does continue to fall, and if bond yields continue to fall as well, and the US dollar does too, and if company earnings and outlooks continue to come out stronger than expected and tariff tantrums abate, then we could see equities continue to rally up and some of that 6.9 trillion US dollars in cash come back into markets, pushing it higher. So let's see. But for now, it seems like we could maybe see full steam ahead. What are the next catalysts for equities that you need to watch? Sure, there's a lot, but no one said riding a bull was a smooth run, did they? So what is standing in our way? Well, of course, we've got Australian inflation data that's out. That's out shortly. And we also get lots more company news out locally and in the US as well. And if everything is sweet and better than expected, then markets should play nicely, as we said. So what are we watching ahead? Well, in the US, we're watching jobs data, GDP, and we're also waiting to see if US-China discussions with the US Treasury Scott Bessent and China do go well over the next couple of days that are allegedly taking place. Down under in Australia, it's quarterly reporting season as well. We don't typically report about cover quarterly earnings season as much as we do around February and November. Remember, February and November are typically when we see full or half-year reports from Australian companies. But nevertheless, there's a lot to be said about paying attention to quarterly results that are being released. They typically don't release financial results, but a lot of mining companies are just giving sense checks of how they're going. So Fortescue Metals has reported today. They said iron ore shipments are actually forecast to remain on track for the year. So that is pleasing. They also reported that iron ore shipments are up, but of course their shares are down. Their shares are down, remember, because the iron ore price is down. FMG shares down 15% so far this year. Also keep an eye on the other iron ore company that has released results, that is releasing results today, and that's Mineral Resources. Of course, MinRes makes money from iron ore, and You Betcha Lithium. But there's plenty of other companies that are reporting as well. What about the gold companies? Well, Northern Star and Ramelius, they're out of the gates as well, reporting quarterly numbers. What have they reported? Well, I'm glad you asked. Northern Star has cut their gold sales forecasts and volume for the year, while Ramelius, the other gold company, has reported lower production for the year should be expected. Now, remember, all this just follows the results that we heard just days ago from the world's biggest gold producer. Who was that? I'm glad you asked. I'll tell you, Newmont. So Newmont said that their costs are the highest that they've seen in a decade. Remember, that is pretty telling. But of course, all these gold companies that we've just mentioned, they are benefiting from gold prices being at record all-time highs, despite it pulling back ever so slightly. Gold is continuing to hold in record high territory, and the gold price is up in high double digits. What else do you need to watch? Well, later this week, locally, we get Australia's biggest tech company, Block. They are reporting a quarterly update. In the US tonight, all eyes will be on Visa. They report their one of the largest credit card companies in the US, and of course, Coca-Cola, your favorite beverage company, apparently. Coca-Cola shares are up 15% this year. Later this week, we get Microsoft, Meta, Apple, and Amazon. And of course, McDonald's, another recession stalwart to watch. Perhaps that's why Coca-Cola shares are up 15% this year. McDonald's and Coca-Cola do have a lot in common. People continue to buy these regardless of what is going on with the economy, and of course, regardless of tariff concerns. What to watch today? Well, that's another question for you that might be on your lips. Well, I guess the futures are suggesting we will see a lift at the open. Long-term investors, I guess they might be catching their breath. That's because the market has rallied for 2 out of the past 3 weeks, and that's why we're saying things are pretty bullish at the moment. But remember that traders, of course, are on knife edge as the US government's Treasury Secretary Scott Bessent has said that they are in discussions with China. Also, keep an eye later today on what we hear and read about from the RBA. Of course, the RBA Assistant Governor gives a speech. And a few more final thoughts, as always, before we let you go. Remember, with the Australian election just days away, it's worthwhile tracking Paladin. Paladin is one of Australia's biggest uranium companies down under. And as we mentioned, their shares have been doing really well over the past 5-6 trading sessions. Paladin shares the best performer last week, up 21%. Yesterday, they popped 1.6% higher, leading the other local uranium companies higher as well. Don't forget Deep Yellow and Boss Energy also rallying up. Now, remember, Paladin reported record quarterly production numbers. They said that they achieved this after restarting their Langer Heinrich mine in Namibia. Also, don't forget that they said that they've not been materially impacted by Trump's tariffs, but do consider what I said yesterday in our daily note. It seems that some traders are really hedging their bets here, betting that the Liberals could maybe, just maybe, win the election at the weekend in 4 more sleeps, and probably maybe, if the Libs get in, usher in that nuclear power policy, and won't that ignite uranium companies' earnings if that comes to fruition? Well, that's something to consider. Now, just a few more final thoughts. As we said, the market is rallying back, not only on better than expected earnings, but also because we do have trade war hopes. But also keep an eye on the major indices because, as we've been saying, fortune favours the brave. And do remember that there's so much to be said about not timing the market and having time in the market. That's how major wealth has been made over time. And don't forget, for the last but definitely not least thought of the day, we do have a webinar on Thursday, 1 p.m. Sydney time, covering the key policies and what investors need to watch and consider ahead of the election on the weekend. Bye for now. See you tomorrow.